This is the GBP pound US dollar weekly chart, and this analysis or this scenario comes as a completion, or as to complete the previous contracting triangle analysis made on this pair some weeks ago. So this is just an alternative, so just another option for the GBP pound US dollar. Is not necessarily looking good, if you want to say so, but as long as the levels are not being broken from a mathematical point of view, or from an Elliott point of view, or from breaking the levels point of view, this is still valid. And if this is still valid, we should have it in somewhere in the back of our minds, thinking that this might come to fruition. Now this recording is being called, and this scenario we're looking for is being called a C wave failure. And these C wave failures are extremely important because when they come to fruition, they almost always unleash an extremely powerful move to the upside or to the downside, in this case to the upside. Usually as a third wave extended from a powerful impulsive move, or a C wave extended from a powerful ABC. So the reason that I'm looking at this structure here, at this scenario, is that this move that comes from the highs in the 2008, these lows here came and take the previous lows, and because those previous lows are being taken, then we might have this scenario. Now, first thing first, whenever you start an analysis, you should mark the low. So mark the low here, and let's make this one like this. And also let's mark the recent highs here, and we have the possibility that this being a nice impulsive move of a higher degree. Let's make this 18 and let's make it magenta. So this is either a 1 or an A wave. So either this is A, then you have a B here, but let's say that this is a 1 for a C wave failure. And then if this is a 1, then normally it should be formed out of 5 smaller different waves, and this is the only place for a 1 and of a lower degree, 16. Let's make it green. So 1, 2, 3, and then the fourth wave here, and the fifth wave that comes something like 61.8 out of the first wave green. So 1, 2, 3, 4, 5, and this is either a 1 or a B, let's say. So either a 1 or a B. We don't know, or an A, sorry. We don't know exactly at this moment of time, because we need more clues to come on the right side here before making the right decision. Anyways, this is a 1, 2, 3, 4, 5, and this 5 moves to the upside, seems to be completed with wave A. And normally you would be inclined to say that this is 1, 2, 3, 4, 5. You might say like this, okay, a nice impulsive move to the upside. I would agree with that, but the only problem is that if you take a look at this B wave that retraces here, it retraces almost all the distance, so it travels almost all the distance of the previous A wave. And that makes the case from this moment of time, we know that this is a flat. So let's take, because of that sharp retracement, we know that is a flat. Now if that is a flat, that is important. Why is that important? Well, that is important because flats come in the sequence of 3, 3, 5. So that is a flat from that moment of time. Now flats came in the sequence of an ABC, but this ABC to be 3, 3, 5. That means 3 legs for wave A. So of a lower degree, we should have here an A, line C, ABC, and then another ABC of the same degree, ABC. So 3, 3, 5. You have 3 ABC, 3 ABC, and then we are looking for 5 ways to the downside. Now you might say, well, there's no way on earth that this move from the highs here, from the B to have 5 legs. Well, it doesn't look so, but it might be an ending diagonal. That means this to be the end of a first wave, this to be the end of a second wave, this to be the end of a third wave, and in an ending diagonal, like in any other impulsive move, the third wave cannot be the shortest one, and then this should be the fifth wave, and this scenario, the fourth wave, sorry, and this scenario implies that we will have a new low below the 148, okay? So if you take a trend line like this, and let's make this trend line, I don't know, let's make it blue. If you take a trend line like this, then this fifth wave should come and touch this trend line, making a value below the lows here. The lows here are 148.31. So 1, 2, 3, 4 to make a 5, and there you go. You have 5 waves in the form of an ending diagonal, A, B, and this should be the C. And as long as this C wave, even if it comes to the downside like this, with this fifth wave, okay, and as long as this C wave does not break the lows of this wave A, and let's change the color of this one, let's make it black. So this is 142.38, and this here is 148.30 area, like this, and let's take a shape. Like this. So unless the C wave here goes below the lows here, that is 142.38, now this is being called a flat in the form of a 335 that comes with a possible C wave failure. Now what is this C wave failure? Well, this C wave failure, it is being called the inability of the C wave to come and make a lower value below A. So if price goes to the downside like this and will go below the A wave here, that is being called the C wave. That is being called I don't know, an A, B, C, a double correction, a double zigzag maybe, and then the price will move to the upside. And in that case we have not a double zigzag. So we have a flat, a normal flat, common flat basically, so then the price should go to the upside. But if we have a flat with a C wave failure, meaning these lows here are not going to be taken, and normally those C waves failure unleash an extremely powerful move into the other side of the market, namely to the upside, either as a third wave, if this is a 1, this is a first wave, then this should be the second wave, and then we're looking for a third wave to the upside, or if that is an A, then this should be a B wave, and looking for a C wave extended to the upside from this move. Now once again, this is what I wanted to show you, because price is so close to this area, and we should take it into consideration. Now, what I will look for also, this ending diagonals have this trend line also here. What I will look what I will look for this scenario. So, and keep in mind, this comes as an alternative of that contracting triangle that we've made earlier. So what I will look for here is watch for this trend line here to be broken to the upside before this loss to be taken, because if we take this trend line to the upside, then this scenario with C wave failure is not valid anymore. So you will have your target, what to watch and what to see based on this one. And because of this move to the downside, making this new low, it is impossible for it opens a gate for this scenario to still be valid. So until it is invalidated, I will still keep it on my shelf as a possible move on the Great Britain pound US dollar. Now this is what I wanted to show on cable. So moving forward towards the Euro Great Britain pound. Bye bye.